Welcome to Discussions with LKN, where LKN gets into technology based discussions and shares his expertise on several topics. I am LKN. In this series of podcasts, I will be talking about how Industry 4.0 model is being implemented in financial sector and related fields. Let's get started. Now comes to the major topic, that is the IoT in financial sector. Well, all said and done, what IoT is doing in the financial sector is basically there are three major components. One is the enhanced transparency, the transaction security, and improved customer services. These are the three things. Coming to the use of IoT systems, using IoT solutions, banks and financial institutions obtain real time data about their clients and clients' assets, which in turn helps them in effective risk management. Some of the earliest examples are from the auto insurance industry. The most progressive American car insurance provider uses OBD devices and machine learning algorithms to study driver behavior and adjust the insurance prices accordingly. The company has more than 1 trillion views and claims that its prices are based on how good you drive and not the type of car you own. In addition, smart sensors helps companies reduce building deployment costs by up to 30% and manage property based on actual pedestrian traffic and room occupancy data. The retail banks are improving the process of credit underwriting and target consumer despite of no credit history available by using biometrics and sensor data. Automation of trading and investment. Here are some basically I did some research. So here are certain quotes from few leaders. Well, one of the leaders, Dr. John Bates, CMO of Intelligent Business Operations and Big Data at Software AG. He says that the future of the financial services industry lies in real time market surveillance and pricing systems that allow companies to monitor the activities of stock markets, social media, and traders, enabling them to keep the communication platform and adjust their pricing accordingly. Another one is Brett King, who is the CEO of Marvin, says that most payments and financial transactions will be fully automated in the future using IoT technology. Also, Chris Skinner, chairman of Financial Services Club, claims that the world's leading financial institutions are currently building the Internet of Value, a globally connected environment that facilitates M2M trading through bitcoins, mobile apps, and smart sensors. This all is and will become possible by implementing the IoT technologies in the financial sector. The next is the financial security. Smart gadget manufacturers offer a variety of tools to secure payment transactions. This includes tokens, biometrics used authentication programs, and also magnetic secure transmission technology integrated with MPO5 terminals. There's also supportive information for this. Diebold, an American financial and security services corporation, went even further and designed a smart ATM. If you want to withdraw some cash, you just need to schedule a session through a mobile app, walk into the nearest ATM, and choose one of the available verification options, that is, NFC, QR code recognition, or an iris scanner. The transaction will be completed within just 10 seconds and is much more secure than the traditional PIN authentication. Thinking forward, software developers use cardiac signatures, data collected through EKG sensors as payment IDs. This is something really advanced. And we also have improved customer service. These are various ways. There are always various ways to enhance customer satisfaction and that's never ending. That's a different story altogether. But with smart financial services solutions provided by IoT, this is something unique. For example, you can drag Barclays and connect your mobile app to your smartwatch. Some retail banks such as Westpac Bank, which is in Australia, uses apps like beacons to meet their customers who pass through their office or come to visit. Beacon strategy is based on personal greeting, product offerings, customer activity, and service. With a completely new approach to loan collateral tracking, smart contracts, and risk free investment decisions, financial situations can significantly reduce the cost of personal and business loans, thus boosting the global economy. So, we are up to the next big topic part of this podcast, that is the usage of big data and cloud in financial sector. Well, the usage of big data and cloud in financial sector helps in cutting costs. It helps in improving flexibility and scalability. It helps in increasing efficiency. It helps to serve the customers faster, and it also helps in building strong customer relationships. Over the years, building and developing along with operating a bank has been expensive. New data centers and servers, along with the new staff to be had to maintaining it, has always been an expensive affair. Unfortunately, this cost may prevent new entrants from providing much needed competition to the monopoly of the traditional high street banks. But cloud computing means banks don't have to invest much in dedicated hardware and software with limited shelf, nor do they need manpower to maintain it. Instead, financial institutions can buy into the infrastructure of a secure, dedicated cloud service provider and focus on making more money in their business. For example, Melbourne based retail bank, ME Bank, with 800 employees, is managing a 20 billion in assets and 280,000 customers nationwide. As a digital bank, it wanted to move from its existing premise data center infrastructure to a more efficient system and in the process reduce operating costs. ME Bank enjoyed 75% reduction in the expenditure of providing development and testing ecosystems of new services and applications just by shifting to the cloud. Cloud gives banks the ability to move their fast growing processing caps ups and down in line with the ever changing global market and customer demands. In today's fast paced world, the customer centric digital banks gaining significant market share, the ability to work fast is the key to staying competitive. Working with the cloud is a very effective way to quickly achieve the scalability. 65% of the organizations initially noted scalability as their primary reason for adopting cloud services, and many financial services organizations have already noted this benefit. Auka, Norway, for example, is launching mobile payments that allow users to send and receive instant money, pay bills, view transactions, and get instant credit. Well, this has been kind of a new development in Indian market also, where we have almost all the banks providing options to send and receive instant money using UPIs, and also they have their own banking apps where they can pay the bills, recharge their mobile phones, and also pay all kind of bills, view their transactions, and also get instant credit. Cloud allows financial organizations to manage their operations to avail better performance. This is especially important for business operating in multiple markets with multiple target demographics. And they need to improve all aspects of their organization to maintain a high level of performance. The key to this process is the ability to interpret and analyze market data. Financial services organizations effectively take advantage of their competitors in this process. to have a look at the new inventions and developments from a particular market without any hindrance. For example, PCT's cloud based digital vision middleware was developed to keep pace with industry variations so that businesses can set their financial goals accordingly. In addition, FIS, the global leader in financial services technology and PCT's strategic partner, runs the US market analysis using the cloud. FIS's market reconstruction platform can collect and process data and generate feedback reports within hours, with the ability to support fluctuations in market activity and complex analytics. Cloud computing makes it easier to develop and launch new products and services, which is especially important for a financial services industry that has traditionally been slow to adapt to customer needs. With PSG2, open banking, and other initiatives that are ongoing or on the horizon, and customer centric start a new wave of fast moving digital banking with new features in less than 3 months. The deployment cloud capability will be important to both competitors as the banks and the established institutions as they strive to be relevant. Unisys, a global information technology company, recently teamed up with PCT to use Microsoft Azure Cloud as a key component of Elevate by Unisys, an omnipresent digital banking platform that enables startups and established financial institutions to provide secure banking services anytime, anywhere. The combination of big cloud data and potentially unlimited computing power allows banks to gain better insight into their customers than ever before. Financial services organizations that ignore the unique opportunity to customize the system to their customers' expectations will pay the price by losing key demographics. For example, 52% of the SMEs in the UK say that the banks are not business friends, while 44% of the US do not feel that their bank understands them. In an increasingly competitive market, it is unlikely that banks will understand these groups and survive without serving them accordingly. When ING Direct renamed itself to Tangerine in 2013, it adopted a completely new business model to ensure that it had access to customer feedback and provide services effectively. The bank achieved this using Microsoft's analytics platform system, the APS, and Azure HD Insight. After transferring 45 business intelligence end users to the business BI environment, Tangerine was able to turn customer data into solid insights faster and more easily than ever before. Furthermore, using Microsoft Cloud, has been able to adjust the new product rollout based on customer feedback in real time, putting the bank one step ahead of its competitors. Well, thanks to the fourth industrial revolution, organizations in all industries are under increased pressure to respond immediately to the consumers and the situations. 24/7. As the banking sector continues to grow, this means that the banks and the financial institutions need to be more flexible and agile as possible. If you are a large, cumbersome financial corporation, this is difficult to eliminate this idea. They need to be able to solve the problems and change direction quickly. High performance banks have discovered that the most effective way to achieve this is through enterprise wide hybrid cloud. Hybrid cloud is a IT infrastructure that connects the public cloud to a private cloud space to create a single flexible cloud environment. Not only does it benefit of having public and private cloud space, but also solves issues surrounding data security, governance, and compliance. as well as the ability to manage the resources in minutes. The theoretical model of such a cloud seems to be a most efficient, yet it is still under trial in most of the world, most parts of the world, basically. Well, all said and done, there is a lot more to be achieved in the financial sector, and there is a long way to go and to see and improve as we go forward. So we are at the conclusion part. IT technologies are not limited to a particular sector of life, yet they cover a huge canvas benefiting almost every aspect of life, ranging from domestic to a huge manufacturing level. The world is continuously headed towards the next industrial revolution, and all you need is to stick with us in this journey. This brings us to the end of this episode. Thanks for joining us during the amazing discussion. We hope that the information we shared was beneficial to you. As always, thanks for listening to Discussions with LKN. With this, I conclude this episode. I have also started my own blog, lokeshlkn.com. Please do follow, subscribe, and share. Do read the blogs. I'm assuming they will be informative to you if you are interested in this podcast series. Also, I have an announcement to make. I have been writing a book from a couple of months altogether. It's named The Odyssey of Industrial Revolution. I am almost done with this book, and I'll be launching in October 2021. Do follow the podcast as well as the blog. I'll be putting on the links when the book is available in the market for purchase. With that, I end this podcast. Thanks a lot. Bye bye.